Hi there, you're watching Your Trades on ET Now. I'm Cheryl D'Souza, and let's take stock of what the markets did in today's trading session, given the fact that we shut shop near the day's highest point, that is the benchmark indices, with the Nifty surpassing the 24,300 mark. It was a day of subduedness when you talk about the banking space. Remember, the Nifty Bank had hit an all-time high levels earlier this week, and today it was a subdued day coming in for the banking space, with the likes of HDFC Bank, or for the matter of fact, Axis Bank, ICICI Bank, being a bit weak in trade today. But what made headlines today definitely has to be the IT index. It was buoyed by HCL Tech, a stellar performance coming in from HCL Tech, given the fact that they've given a guidance that was much better than what the street was anticipating. And on back of that, you had the IT index that surpassed in excess of about 4% or so on an intraday basis, and that also logging in the best day in about 9 months. So that's your IT index. Now all eyes will be on Tech Mahindra's Q4 numbers. But talking about numbers, it's going to be a heavy day come tomorrow, given the fact that you'll have Axis Bank, Nestle, HUL, as well as SBI Life that will be reporting their numbers. If you look at the FMCG pack, what street is anticipating, a muted set of numbers coming in. But it was Havells that stole the show in today's trading session. No doubt that Havells saw a downtick, a tad bit of a downtick on back of its earnings, but you had the brokerages that were actually sounding a little cautious on Havells, given the fact that you had Havells kind of given guidance or caution about the demand outlook. So on back of that, Havells is the one that was in focus today. Profit booking, that is the term that is being used for the gold market today, given the fact that you had the gold prices actually rally not just in India as well as globally, but now you've seen some sort of a easing comment for the gold, as well as dollar is now stabilized, while in the other headlines, and a tragic one at that, when you talk about what happened late yesterday in the evening, you now have government that's taking stock of the Pahalgam massacre. There have been series of meetings taking place. You also had the Home Minister that visited the site as well. So these are the top stories that we are tracking at this hour. But like I said, yes, for the markets, with the Nifty surpassing that 24,300 mark. But what's the way forward for the markets going ahead? We have Kapil Shah, who of MK Global Financial Services, joining us. Hi, good afternoon, Kapil. Thank you so much for joining us right now on the show. And just wanted your view on the markets, given the fact 7th consecutive trading session of gains coming in for the benchmark indices. Do you think that we should now get used to this?
Yes, first of all, good afternoon, everyone, and pleased to be over here. Yes, Ms. As far as coming back to the Nifty from past 10 trading sessions, it has given the return more than a 10%. So it was a very wonderful rally that we have witnessed. And within that rally, whatever the immediate resistance levels were there, like the 23,800 level, 24,200 level, they have broken with a very lots of ease. So yes, the bullish momentum is likely to continue. But yes, by the same time, we also have to remember that somewhat we are approaching to some sorts of the overbought zone. And on the higher side, we are having the very stiff resistance around the 24,700 level. So at this juncture, I see that there will be a kind of a risk-reward ratio is like a 1:1, but bullish momentum likely to continue. And 24,700, 24,800 is what the upside potential we can expect.
So 24,400, is that what you just said? I kind of missed the number.
Yeah, that is a 24,700 to 24,800 as an upside potential.
All right. So that's the upside that you should watch out for when you talk about Nifty. But which are the stocks, the sectors do you think that will actually push the markets higher going ahead?
Yes, Ms. Right now there is a lots of back and forth that keeps on happening in sector side. Means let's say banking stocks was doing well in the coming days, but today they have witnessed a profit booking. IT stocks were like a laggard, but today they have come up very firmly on the higher side. So there is a back and forth keeps on happening in the sector. But when we are coming to the latter part of the rally, so at that time we normally expect that FMCG and pharma likely to take a lead. And within the pharma also, we have some sorts of a chart geometry wise. Some of the stocks are giving the fresh momentum. So I believe that pharma, FMCG, and some sorts of defensive name take a uplift now because of latter phase of the market that we are seeing now.
In this given scenario, then, which are your top picks right now, Kapil?
Yeah, so the very first pick I will be go within a Sun Pharma. So Sun Pharma right now it is trading near to the 1785 level. So over there we will be having the positive view. A stop loss will be like a 1730 and a target will be a 1900 level. And by the same time, there is another stock like a blue chip company, L&T. So L&T also the 3294 is a level where at the current level we can go for the long position, and stop loss wise a 3170, and on the higher side 3525 will be the level.
Right, so those are the top picks coming in from Kapil, that is Sun Pharma as well as L&T. On that note, thank you so much, Kapil, for being part of the show as well as sharing your top pick with our viewers. But time for now for some interesting sectoral opinion coming in from HSBC's Harold van der Lende. Within India, he finds value in themes such as healthcare, consumption as well as private lenders. But what's his rationale? Listen in.
The sectors that we talk about with mostly foreign investors is to a large extent large liquid sectors where valuations are reasonable. So you end up with the banks very often, private banks in particular, or where valuations are maybe a little bit more elevated, but where at least the growth story is relatively macro insensitive in the sense that, for example, is dependent on demographic or slow shifts in society that even though interest rates go up or down, don't really change that much. Think about, for example, rising consumption or, for example, demand for medical and healthcare in India, such as hospitals and these sort of things. So those are the sectors where we look at as well. So bank, consumer, and I would say selected but domestic healthcare.
All right, so those are the interesting sectoral picks coming in from HSBC. But given the fact that the markets are scaling new highs day after day, with the broader markets also now at multi-month high levels, let's take a look at what exactly is the F&O picture and the derivatives picture at this point in time. Given the fact that if you look at the index future trend for April expiry, Nifty is seeing long build up, while Nifty Bank is actually seeing a trend of long unwinding. Not just that, let's talk about the active calls that was, or which are the calls that were active in today's trading session. That is the 24th April expiry. If you look at it, is 24,400, while 24,500, both of them seeing call buying. While which are the active puts that you are seeing in the markets? It is 24,300 as well as 24,200. So that is the picture when you talk about the derivatives at this point in time. And remember, when you talk about the cash markets, the markets are actually scaling new highs. Today you had the IT index also seeing one of the best days in about 9 months. But if you look at the IT index, there are mixed pictures and mixed signals coming in from each of the sectors. While the IT sector is at a crossroads, many bulls are making a case for attractive valuations and healthy deal win trends, while the bears are of the view that discretionary spends will remain soft, coupled with the tariff jitters delaying decision making. But is the worst finally over for the Indian IT sector? Will the sector have to brace for more storm and shocks? Well, I have Varun as well as Sharad here with the bull case and the bear case when you talk about the Indian IT sector. Take over, boys.
Well, yes, the Indian IT space, it has seen some kind of beating over the last 3 odd months, Varun. But interestingly, there is a sliver of hope. Okay. I would like to put my first bull case point, and that is that there hasn't been any major cancellation of orders. Okay. If you look at TCVs of Wipro, Infosys and TCS, they have actually been on a surprisingly on the upper side. You see the numbers over here. That's on the green side. So that's my first point.
Definitely the orders might be good, the TCV have shown a good growth, but if you look at the overall constant currency revenues, they have been modest. In fact, the expectations were modest, and the overall performance, if you look for the IT companies, they were actually muted. Now look at Wipro, the overall constant currency growth has been down by 0.8%. For Infosys, the big guy, the overall constant currency growth has been down by around 3.5%. For TCS also, it has been down by around 1%. So you might have order book, you might have the TCVs who are going up, but yes, the overall performance, on the ground performance has not been that great. Even when compared to expectation, the companies, I mean Wipro, TCS, Infosys, any company if you mark, they have actually shown performance less than what was expected. Look at TCS, the overall miss was by around 0.6%. For Wipro, it was a miss of around 0.9%. And for Infosys, the miss was by around 3% versus expectation. So people were expecting, yes, the overall performance would be muted, but the performance was more muted than what was expected, and that is my first bear point.
Well, apart from this, this is what's happening. But what's the future? That is important. The FY26 guidance, that is good. It is not really bad as what we had expected. The future is not that bad. And all of them, Wipro, Infosys, TCS, you look at the screen, the order book is still not very bad. It is maintained, but the FY26 revenues over here, especially Infosys and TCS, over there, it has been coming on the positive side. So, of course, there seems like there is hope as well.
The future depends upon the headcount, and look at the headcount addition, what has happened in this quarter. For Wipro, it is 614. For Infosys, it is just 200. And for TCS, it is 625. And continuously, we are hearing reports out people sitting on bench. There are attritions happening in IT sector. And upon that, if you look at the commentary of majority of the companies, they are saying that the overall discretionary spending, that is reducing. If you look at Accenture also, even they have highlighted some of the concerns. So yes, you might have a good future, but your future depends upon headcount, and that is a lead indicator which is showing you that there is some problem in the overall IT sector.
Well, the sector, there might be issues, but as an investor, we also look at valuations. That is very important.
Right.
And if you look at the valuations this time, post the results, they have actually turned very attractive. And of course, do remember, FIs also have strong holdings in the IT space as well. And also the DIs, they also have a big conviction in this space as well. So there might be some money flowing in because the valuations have turned attractive and they're actually significantly lower compared to the long-term averages.
Okay, the valuations might be attractive, but if you look at the overall brokerage, verdict on what they have told about on the stocks, majority of them have actually cut their price target, especially when you compare the price target with the Q3 results. Look at for Infosys, Wipro, and majority of the companies, even HCL Tech, after such good results, there are brokerage houses who have cut their price target. For these three companies, TCS, Infosys, and Wipro, you have seen a price target cut of around 15 to 20% when you compare the price target from Q3. So even your valuations might be attractive, but brokerage houses are saying that there is something bad, and that's the reason there is a big price target cut of around 15 to 20%.
Well, yes, there are some brokerages coming up with target cuts, but there are some other brokerage houses also which they have given a bull case, be it Motilal Oswal as well as Kotak Securities. Over here also there is a improvement, you could say 15 to 20% return potential coming in from the current levels because of course, valuations being attractive. And interestingly, if the future holds good for these companies, then it will augur well for both TCS and Infosys as well.
If the future was so good, then there would not have been an EPS cut. Look at majority of the companies. You can see an EPS cut of around 3 to 4% for majority of the companies. For Wipro, after the results, the EPS cut on a consensus basis was around 3.4%. For Infosys, it was 4%, and for TCS, it was 3.9%. Even though you could have seen some of the broking house who have raised their overall target, but majority have cut their target and they have cut their EPS, estimates on these companies because of the results that they have given and because of the bleak future that these companies have, especially, after Donald Trump coming and after the tariff war, trade war which is going on. There is a lot of uncertainty with respect to US. People are speaking about recession, and that's a big headwind for IT companies.
Well, yes, there is a confusion between me and Varun actually, which side to actually fall on, and we'll just leave it to our viewers what to take out of it.
Absolutely. Thank you so much for that, Varun, as well as Sharad. Rightly put it. A lot of confusion when you talk about the bull and the bear cases coming in for the IT sector, given the fact that today you also had HCL Tech surging in trade today. Inline set of numbers coming in for the quarter gone by. But what actually enthused the street was the guidance, and that revenue guidance was much better than what the street was anticipating. We actually spoke to C. Vijay Kumar, who is the CEO of HCL Tech. Let's hear out exactly what the management had to say post the earnings.
With respect to pipeline, we are very pleased with the health of our pipeline. It continues to be near all-time high, even as we experience healthy conversions in Q4. The pipeline is supported by multiple deals across IT and business services, engineering services, and HCL software business. Looking ahead, we believe enterprises will accelerate AI adoption to enhance efficiencies and drive innovation. Generative AI has two facets. At the time of contract renewals, we expect both pricing pressures as well as new revenue opportunities. We believe discretionary spending will continue to be subdued in this environment. Geopolitical factors like tariff and deglobalization are expected to impact IT services. in the coming months, it will be an important topic to observe and monitor the ongoing development. As I look beyond the uncertain short term, I strongly believe there will be strong growth opportunities emerging out of the market uncertainty.
All right, so that's the management of HCL Tech. But given the fact that a lot of we are in the thick of the earnings season, and you'll have a tech major, Tech Mahindra, that is all set to report their Q4 numbers. We are expecting a muted set of numbers coming in for this one, driven by the weakness in the high-tech vertical. Ansh is here to exactly tell us what the street is penciling in when you talk about Tech Mahindra. Ansh?
Tech Mahindra is set to report a mixed set of numbers. Dollar terms revenue is expected to go down by around 1.1% sequentially, whereas CC terms may see a modest decline of just 0.3%. If we talk about in rupee terms, then that is expected to rise by around 1.2%. But overall revenue is expected to decline due to a continued weakness in its high-tech vertical and impact from low margin deal. Now, if we talk about margin, then that is actually expected to go up by around 17 basis points from 10.2% directly to 10.37%. Despite of wage hikes. Now, this margin is expected to improve on the back of a better cost control and operational efficiency. Whereas if we talk about profitability, then that is also expected to improve slightly to around that 1,000 crore, seeing a sequential increase of 1.8%. Now, apart from this number, there are 4 key things to watch out for. First is management commentary on overall demand trend and FY26 guidance. Second is outlook on discretionary IT spending. Third is update on deal pipeline, especially in the Gen AI space. And fourth is trends in headcount movement and attrition rate trajectory.
All right, thank you so much for that, Ansh, for telling us what to expect from Tech Mahindra when they report their Q4 numbers. But talking about numbers, you had Havells that reported their numbers. Decent set of numbers coming in from Havells, but what actually kind of spooked the street was the fact that they were very cautious on the demand outlook. We spoke to Anil Rai Gupta, who is the chairman and the managing director of the company. Let's hear out what's in store for the company when you talk about the guidance and the capex going ahead.
I believe the margins have been quite decent and coming back in all businesses, not just cables and switchgear and Lloyd. I think ECD is doing well. It's improving, and lighting has always been traditionally a high margin business for Havells. So we should be expecting a very good FY26 for all businesses. Last year, capex was about 750 crores. This year, the plan is about 1,200 crores. And over the 2 years, this year, coming year and next year, we should be looking to invest about 2,000 crores. Part of the capex is going in developing the new refrigerator business, also enhancing the capacity of cables business, also in setting up a new R&D center.
All right, so that's the word coming in from the Havells management. But talking about earnings, you have Axis Bank also that will be reporting their numbers. Gaurav is here to tell us what are we expecting from Axis Bank in the quarter gone by. Gaurav, over to you.
Well, yes. When it comes to Axis Bank, we are expecting advances to grow somewhere in the range of 9%, while deposit growth could remain somewhere in the range of 7 to 8%. And as a result, when we talk about net interest income, it is likely to grow somewhere in the range of 6% on a year-on-year basis. When we talk about other income, usually Q4 is stronger for other income. But given that there are expectations that there may be some slowdown in loan book growth for Axis in Q4, we may see a lower fee income this quarter. And as a result, when we talk about PPOP, it is expected to grow somewhere in the range of 4 to 5%. When we talk about provisions now, there are no major concerns about the asset quality, but credit cost is likely to inch up to normalized level of 0.9%. And as a result, when we talk about profitability, now Street is expecting profitability to decline almost by 4% on a year-on-year basis, although it may remain healthy with a growth of around 6% on a sequential basis. When it comes to net interest margins, now Street is expecting some kind of softness in net interest margins because of the EBLR linked loans, and second is the change in loan book mix. So definitely a 3 basis point of fall is what they are expecting. But let's not forget that the peer banks have already reported some uptick in net interest margins. So definitely there is a scope of positive surprise here as well. In terms of the commentary, loan book growth and deposit growth commentary is definitely something to watch out for. And it is also very important to see how bank is commenting on the margin outlook for FY26. But definitely on the back of the numbers, we are expecting good set of numbers with some expectation of positive surprise from Axis Bank.
All All right, thank you so much for that, Gaurav, for outlining what we're expecting from Axis Bank in the quarter gone by. But let's talk about stocks that made headlines in today's trading session. Ravinder Ravinder is here with that list. Ravinder, over to you.
Whereas Bharat Forge is in focus, where company has received CCI approval for acquisition of 100% shareholding in AAM India Manufacturing Corporation Private Limited. Moving to next, on back of Q4 earnings, Shine DLM were also in focus, where company has announced its Q4 earning. And the revenue saw an uptick of almost 19% year-on-year basis, driven by strong demand in the aerospace segment. And if we talk about PAT, then PAT also saw a good uptick of almost 37% year-on-year basis, from 22.7 crore to 31 crore. And if we talk about EBITDA, then EBITDA also saw a good uptick of almost 97% year-on-year basis, from 29 crore to 57 crore. And margin saw a good uptick from 8% to 13.4% year-on-year basis. Moving to next, Alchem Lab were also in focus, where company has completed acquisition of 100% stake in Adroit Biomat, making it a wholly owned subsidiary of the Alchem Lab. And moving to next, Aurobindo Pharma were also in focus, where Aurobindo Pharma Limited has announced that the wholly owned subsidiary Eugia Pharma Specialty has received final US FDA for to manufacture and market Destanib tablets, and the approved product has an estimated market size of USD $1.8 billion for the 12-month ending February 2025. And lastly, Lupin were also in focus, where Lupin Diagnostic Limited, which is a wholly owned subsidiary of the company, has received a 100% NABL, National Accreditation Board for Testing and Calibration Laboratories, accreditation across all its greenfield lab, and company now among India's top fully accredited diagnostic chain.
All right, thank you so much for that, Ravinder. And with that, we are totally out of time on this edition of Your Trades. It's a goodbye from me, Cheryl D'Souza, and the team that put the show together. Thank you so much for watching. Stay tuned to ET Now for more news and updates.